All right, let's dive into the world of factor analysis. But don't worry, I promise it's not as dry as it sounds. Imagine trying to understand a huge pile of tangled wires where some are secretly connected. Factor analysis is the tool that helps us untangle them, revealing hidden patterns and connections in our data. We're talking about reducing chaos, making sense of massive data sets, and discovering the underlying forces shaping what we see. First, we'll get into why this method matters and how it influences everything from psychology to finance. Then, we'll break down the unseen forces at play, latent factors, those sneaky little things that shape our data without us realizing it. Once we've wrapped our heads around that, we'll explore the step-by-step process, collecting data, cleaning it up, because messy data is like a bad haircut. Everything just looks off, and extracting meaningful factors. But not all factor analysis is the same. We'll compare exploratory and confirmatory factor analysis, showing when to use each and why. Then comes the part where we play detective, using different methods to extract factors, rotate them for better clarity, and analyze their significance. It's like adjusting a blurry photo until all the details pop into focus. And don't think this is just for researchers in lab coats. Oh no, businesses use it to understand customer preferences. Financial analysts use it to predict market trends, and even marketing teams rely on it to segment audiences. We'll look at real-world applications across industries from consumer behavior to risk management, with some fascinating case studies that prove just how powerful this technique really is. Of course, no good analysis is complete without looking at the pitfalls. Ever heard of overfactoring? It's like trying to explain everything with too many details, making things more confusing instead of clearer. We'll explore common mistakes and how to avoid them, because nobody wants a model that looks sophisticated but doesn't actually make sense. Then we'll take a peek into the future, where machine learning is pushing factor analysis into new territories, making it even more efficient and insightful. Finally, we'll wrap up with ethical considerations, because with great analytical power comes great responsibility. So stick around, because by the end of this, you'll see factor analysis not just as a statistical tool, but as a way of uncovering hidden truths in data. Whether you're a scientist, a marketer, or just someone who loves making sense of complex information. So, what exactly is factor analysis, and why should you care? Imagine you're at a giant party or a work meeting that should have been an email. Everyone's talking, but somehow certain conversations just seem connected. Factor analysis is like being able to zoom out and see that actually there are just a few big topics dominating the room. Maybe office gossip, weekend plans, and that one person going too deep into their weird hobby. That's what this method does with data. Instead of drowning in a sea of numbers, factor analysis finds hidden patterns, simplifies complexity, and helps us understand what's really driving things behind the scenes. It's used everywhere, from psychology, figuring out personality traits, to marketing, why you really buy things, to finance, making sense of stock movements. And the best part? You don't need to be a math wizard to get it. Over the next slides, we'll break it all down step by step. The hidden variables shaping your data, how to extract meaningful insights, and even some of the classic mistakes people make so you don't. Because, let's face it, data analysis can feel like assembling IKEA furniture. Frustrating at first, but once you see how the pieces fit together, everything just clicks. Ready to uncover the secrets your data is hiding? Let's get started. All right, now that we know factor analysis helps us make sense of overwhelming data, let's talk about the rules of the game, the core principles that make it work. Think of your dataset as a stage filled with dancers moving in all directions. At first glance, it looks chaotic, But if you watch closely, you'll notice that they aren't all moving randomly. There are hidden choreographers, latent factors, guiding their steps. Your job? To figure out who those choreographers are and what dance they're leading. Here's how it works. Latent factors exist. There are invisible forces influencing our data. We can't see them directly, but we can infer their presence by observing how different variables move together. Correlation is key. If two dancers, variables, always move in sync, chances are they're being led by the same hidden choreographer, factor, data reduction. Without losing meaning, instead of tracking each dancer individually, we group them based on their movements, making the whole performance easier to understand. Why does this matter? Because without these principles, we'd be stuck watching a jumbled mess of numbers without ever realizing the elegant patterns underneath. Whether you're analyzing customer preferences, stock market trends, or psychological traits, factor analysis helps you identify what's really driving the show. And now that we've set the stage, it's time to meet these hidden choreographers, latent factors. Next up, we'll uncover how they shape your data without you even realizing it. So now that we understand the big idea behind factor analysis, let's talk about how to actually do it. If factor analysis were a detective story, this is where we put on our Sherlock Holmes hat and start looking for clues. The goal? To sift through a messy pile of numbers and uncover the hidden forces shaping our data. But before we go all in, there's one crucial thing to remember. Good analysis starts with good data. No matter how powerful the technique, if you start with garbage data, all you'll get is mathematically enhanced garbage. That's why the first thing we do is gather and clean our data, making sure there are no missing values, outliers, or inconsistencies messing up the results. Once our data is in good shape, it's time for the real magic to begin. We run a correlation analysis to check how our variables interact, because if they have nothing in common, there's no factor structure to find. The stronger the correlations, the better the chance that hidden patterns exist, and that's where the fun begins. Extracting the factors. This is where we apply mathematical methods like principal component analysis, PCA, or maximum likelihood to pull out the underlying dimensions. It's like peeling away the surface to reveal the blueprint underneath. But here's the trick. Just because we can extract a ton of factors doesn't mean we should. If we keep too many, we're drowning in complexity. If we keep too few, we oversimplify. That's why we use tools like eigenvalues and scree plots to decide how many factors actually make sense. Now, raw factors are a bit like an unshuffled deck of cards. Everything's there, but it's not in the right order yet. Enter rotation, a technique that makes the factors clearer and more distinct. This is where the data starts making sense, and we can finally see which variables belong together. Some methods like Varimax keep the factors completely independent, while others like Promax allow them to be correlated. The choice depends on whether we think our factors influence each other or not. Once we've rotated the factors into a meaningful structure, it's time for interpretation. This is where the numbers transform into insights. We look at factor loadings, the strength of the relationship between each variable and its factor, and give meaning to our results. At this point, we can name the factors based on what they represent, whether it's personality traits, consumer motivations, or financial risk indicators. It's like finally seeing the bigger picture instead of just staring at puzzle pieces. And just like that, we've gone from a messy pile of numbers to a structured, meaningful model. But don't get too comfortable yet, because there are still common pitfalls to avoid. And trust me, factor analysis can go very wrong if you're not careful. Up next, we'll talk about the hidden dangers lurking in your analysis and how to steer clear of them. Not all factor analysis is created equal. Depending on what you're trying to do, there are different flavors of this method, and picking the wrong one is like using a spoon to cut a steak. Technically possible, but why make life harder? The two main types you'll come across are exploratory factor analysis, EFA, and confirmatory factor analysis, CFA, and the difference between them is kind of like detective work. Exploratory factor analysis is like walking into a crime scene with zero assumptions. You don't know what happened, who's guilty, or even if a crime was committed. You're just looking for patterns in the evidence, trying to figure out what's going on without any preconceived ideas. That's what EFA does. It lets the data speak for itself, searching for hidden connections between variables without forcing them into a predefined structure. This is great when you have a lot of information but no clear idea of how things are related. On the other hand, confirmatory factor analysis is like going into the investigation with a prime suspect in mind. You already have a theory about how the factors should be structured, and you're just testing whether the data supports it. If the evidence lines up with your expectations, great. If not, well, time to rethink your model. CFA is used when you already have a well-defined idea of which variables should be grouped together, and you need statistical proof that your assumptions hold up. Think of it like this. If you're exploring a new city with no map, EFA helps you discover the major roads and landmarks. But if you already have a map and want to check if it's accurate, CFA confirms whether your mental layout of the city actually matches reality. So which one should you use? If you're trying to discover patterns without prior knowledge, go for EFA. If you're testing an existing theory, CFA is your best bet. Either way, both methods are essential for uncovering the hidden structure of data, and once you've picked the right tool, the next step is making sense of the factors themselves, because finding them is one thing, but understanding them is where the real magic happens. Let's dig into that next. Exploratory factor analysis is like being a detective without a suspect list. You have a massive data set, but you don't yet know what relationships exist beneath the surface. Instead of forcing the data into predefined categories, you let it reveal its own structure. It's like walking into a bookstore without knowing what you want to read. You start noticing patterns, grouping books by genre, and before you know it, you've identified key themes just by observing what naturally belongs together. So why use EFA? Because real-world data is messy. When you have tons of variables and no clear idea of how they connect, EFA helps you uncover hidden patterns that might not be obvious at first glance. Researchers, marketers, and analysts rely on it to simplify complexity, whether it's figuring out what really drives customer behavior, identifying psychological traits, or segmenting financial risk factors. The process itself is all about finding clusters of variables that move together, suggesting they're influenced by the same underlying factor. We start by analyzing correlations, because if variables are truly connected, they'll show similar movement. Then we extract potential factors using mathematical techniques like principal component analysis, PCA, or maximum likelihood. But here's the tricky part. Just because the numbers suggest a certain number of factors doesn't mean they automatically make sense. That's why we use tools like eigenvalues and scree plots to decide how many factors to keep. Because keeping too many is like trying to juggle flaming torches when you could just stick to 3 balls and not set yourself on fire. Once we've identified the factors, we rotate them to make their structure clearer, like adjusting a blurry image until the shapes become distinct. Finally, we interpret the results, naming the factors based on what they represent. This is where we go from numbers to meaning, seeing which variables load onto each factor and what they might signify in the real world. EFA is powerful because it's unbiased. It doesn't force the data into a mold. It just highlights the natural connections. But with great power comes great responsibility, because misinterpreting these factors is a real risk. Up next, we'll look at confirmatory factor analysis, where instead of exploring blindly, we test a theory to see if it actually holds up in the real world. Stay tuned. If exploratory factor analysis is like wandering through an unfamiliar city to discover major roads and landmarks, then confirmatory factor analysis is like checking a GPS to see if your mental map is actually correct. Instead of blindly looking for patterns, CFA starts with a hypothesis, a structured idea of how the variables should be grouped, and tests whether the data supports it. It's less of a let's see what happens approach and more of a prove it mentality. This is the go-to method when researchers already have a theory about how different traits, behaviors, or financial indicators are connected. Psychologists use CFA to confirm that a personality test actually measures distinct traits as expected. Businesses use it to validate customer segmentation models. Financial analysts use it to ensure risk factors are measured correctly. The key is that we're no longer discovering patterns, we're verifying them. The process starts by specifying a model, which is basically a prediction of how variables should load onto specific factors. Then we use statistical tests to estimate whether our model fits the data. If it does, great. We've confirmed that our understanding is accurate. If not, we have some work to do. Maybe we need to adjust the number of factors, reassign some variables, or reconsider our assumptions. CFA isn't just about proving that we're right, it's about making sure we're not wrong. Misfit models can lead to misleading conclusions, which is why model fit statistics like the chi-square test, RMCA, and CFI are used to check how well our theoretical structure aligns with reality. If the fit is poor, it's like realizing your GPS is off by 3 blocks. It's frustrating, but it's better to correct it than to keep driving in the wrong direction. While EFA is open-ended and exploratory, CFA is structured and confirmatory. Together, they form the foundation of factor analysis. One helps us find the patterns, and the other helps us validate them. And once we're confident in our factors, the next step is choosing the best way to extract and refine them. Let's dig into that next. If factor analysis is about uncovering hidden structures in data, then factor extraction is like being an archaeologist deciding how to dig up buried artifacts. The goal is simple: remove the unnecessary dirt, noise, and carefully extract the most meaningful structures, factors, without breaking anything important. But just like in archaeology, there's more than one way to dig, and the method you choose depends on what you're looking for. The most common approach is principal component analysis, PCA, which is like using a giant scoop to remove as much excess material as possible while preserving the key structures underneath. PCA simplifies data by transforming variables into a smaller set of uncorrelated components, making it great for reducing dimensionality. However, PCA isn't technically factor analysis in the purest sense. It's more about summarization than uncovering latent constructs. For a more statistically refined dig, principal axis factoring, PAF, is often preferred when the goal is to understand underlying relationships rather than just simplifying data. Unlike PCA, which looks at total variance, PAF focuses only on shared variance, the stuff that truly connects the variables. It's like carefully brushing away the dirt instead of bulldozing the entire site. Then there's maximum likelihood, ML extraction, which is great when you need to estimate factors in a way that allows for more advanced statistical testing. If PCA is a broad excavation and PAF is a detailed dig, ML is like using high-tech scanners to predict exactly where the artifacts are before you even start digging. It's powerful, but assumes that your data follows a normal distribution, so if your dataset is a little messy, ML might not be the best tool. Choosing the right extraction method depends on your goals. If you just want to simplify data, PCA does the job. If you're trying to understand deeper latent structures, PAF is a safer bet. And if you need to run further statistical tests, ML might be your best friend. No matter which approach you use, extraction is just the first step. Next, we need to fine-tune our findings to make them clearer and more interpretable. And that's where factor rotation comes in, which is up next. So, You've extracted your factors, but they still look like a blurry mess. The variables seem to be connected, but not in a way that makes much sense yet. This is where factor rotation comes in. It's like adjusting the focus on a camera until everything snaps into place. Without rotation, your factor structure can be difficult to interpret, with variables awkwardly spread across multiple factors instead of neatly grouping together. Rotation works by shifting the axes of the factors, making them easier to understand without changing the fundamental relationships in the data. There are two main approaches to rotation, and the choice depends on whether you believe your factors should be independent or if they're allowed to influence each other. If you want your factors to be completely separate, Varimax rotation is your best friend. It spreads out the factor loadings, making each variable load strongly onto just one factor while keeping everything orthogonal, basically making sure the factors don't overlap. It's like organizing a closet where shirts go in one section, pants in another, and socks in a drawer. Everything is neatly divided, but real-world data isn't always that simple. Sometimes factors naturally influence each other, and forcing them to be independent is like pretending that work stress and coffee consumption have nothing to do with each other. In cases like this, oblique rotations like Promax or Oblimen allow for correlation between factors. This approach acknowledges that some variables belong to multiple factors in a meaningful way, which often gives a more realistic representation of the data. The key takeaway: if you need clear, distinct factors with no overlap, Varimax is your best bet. But if you suspect your factors are interconnected, oblique rotation will give you a more accurate model. Either way, rotation helps us make sense of our extracted factors, turning them from an abstract mess into a structured, interpretable model. And now that we can finally see our factors clearly, the next step is understanding what they actually mean. Up next, we'll dive into interpreting factor loadings and uncovering their true significance. We've extracted our factors, rotated them for clarity, and now we're staring at a table of numbers that supposedly holds the key to understanding our data. Welcome to the world of factor loadings, the secret language that tells us which variables belong where and how strong those relationships really are. Factor loadings work like a matchmaking service for variables, revealing which ones have the strongest connections to each factor. Think of it like a music playlist. If a song has a high loading on the workout pump-up factor, it probably has an energetic beat, motivating lyrics, and a bass drop that makes you want to lift heavier than you should. On the other hand, if it loads heavily onto the rainy day sad songs factor, it's probably acoustic, slow, and emotionally devastating. The numbers themselves range from 1 to 1, where higher absolute values indicate a stronger relationship. A loading above 0.4 is typically considered meaningful, kind of like saying, yep, this variable really belongs here. If a variable loads onto multiple factors, things get trickier, and we have to decide where it fits best or whether it represents multiple influences. But be careful. Just because a variable loads strongly onto a factor doesn't mean it's causing the relationship. Correlation isn't causation, and misinterpreting factor loadings can lead to some seriously flawed conclusions. If factor loadings were a crime scene, they'd tell us who was present, but not necessarily who committed the crime. That's why interpretation requires both statistical logic and subject matter expertise. So now that we've unlocked the meaning behind these numbers, what's next? Factor scores, the numerical values that allow us to quantify these relationships and actually use them in analysis. Let's see how they work. So you've uncovered your factors, interpreted their loadings, and now you want to actually use them. This is where factor scores come in. They take everything we've learned and turn it into actionable numbers that we can plug into models, compare across groups, and actually make sense of. If factor loadings tell us which variables belong to which factor. Factor scores tell us how much of that factor is present in each case. Think of it like a personality quiz. Imagine you're measuring traits like introversion versus extroversion and creativity. Once you've identified the key factors influencing personality, factor scores let you calculate where each person falls on those dimensions. One person might score high on creativity but low on extroversion, while another might be a social butterfly but not the most imaginative thinker. These scores let us quantify abstract traits and compare them in meaningful ways. In research, factor scores are used to analyze trends, segment populations, and make predictions. In marketing, they help group consumers into meaningful segments based on behavior. In finance, they can quantify risk levels based on economic indicators. Essentially, they let us take something that was once qualitative and turn it into a structured numerical insight that can drive decision making. But here's the thing, factor scores aren't perfect. They're influenced by the extraction and rotation methods we used earlier, and different calculation approaches can slightly alter the results. That's why interpretation requires both statistical reasoning and common sense. Now that we've transformed our data into usable scores, it's time to step back and look at the bigger picture. But before we get too comfortable, there are some crucial assumptions we need to check, because if these assumptions don't hold, our whole analysis could fall apart. Let's take a look at what could go wrong and how to avoid it. Factor analysis is a powerful tool, but like any good magic trick, it only works if you follow certain rules. These aren't just technical formalities. They're the backbone that keeps your results valid. Ignoring them is like baking a cake without measuring the ingredients. Sure, you'll get something, but whether it turns out edible is another story. First, we assume that our variables are linearly related, meaning when one changes, the others move in a predictable way. If that's not the case, trying to extract factors is like mapping out constellations in a thunderstorm. Then there's normality, which means our data should follow a roughly bell-shaped distribution. If it doesn't, our estimates can get wonky, and factor analysis will start throwing temper tantrums. Another big one is homoscedasticity, a fancy way of saying that the variance across different groups should be consistent. If some variables are bouncing all over the place while others are staying relatively stable, our model might get distorted. And let's not forget sample size. Factor analysis needs a decent amount of data to work properly. Trying to analyze too few cases is like judging an entire movie based on a single scene. You're bound to miss the bigger picture. Now, what happens if these assumptions don't hold? Well, your results could be misleading at best and completely useless at worst. Factors might emerge that don't actually exist. Relationships might be exaggerated or buried, and your entire analysis could collapse under its own weight. It's like building a house on a shaky foundation. Everything looks fine until it suddenly isn't. So before we get too confident in our results, it's worth taking a step back and making sure these assumptions hold. But even if everything checks out, we're not out of the woods yet. Factor analysis comes with its own set of common pitfalls and challenges, and trust me, you'll want to know about them before they trip you up. Let's dive into the biggest mistakes people make and how to avoid them. Factor analysis is an incredible tool when used correctly, but when things go wrong, they can go really wrong. It's like using GPS without checking if you entered the right destination. Everything might seem fine until you realize you're 2 hours off course, staring at a cow in an open field instead of your intended destination. Let's talk about the biggest traps that people fall into and how to avoid them. One of the most common mistakes is overfactoring, extracting too many factors just because the software says you can. This is the statistical equivalent of overfitting a model, where you start seeing patterns that don't actually exist. If you extract too many factors, you risk breaking your data into meaningless microgroups instead of uncovering real underlying structures. The fix? Stick to logical criteria like eigenvalues greater than 1, scree plots, and interpretability. If your factors don't make sense, chances are you've got too many. Then there's multicollinearity, which happens when variables are too closely related. Think of it like trying to have a conversation with two people who keep finishing each other's sentences. You don't need both. If variables are highly correlated, they might not be contributing unique information to your model. A quick fix? Check variance inflation factors, VIF, or remove redundant variables before running the analysis. Another sneaky problem is poor data quality. Garbage in, garbage out. No statistical trick can save you if your data is full of missing values, outliers, or inconsistencies. If half your dataset is missing or one extreme value is throwing everything off, your factors might be misleading. The solution? Clean your data before even thinking about factor analysis. Handle missing values, standardize measurements, and watch out for extreme outliers. And let's not forget misinterpretation of factors. Just because the numbers suggest a factor doesn't mean it represents what you think it does. If your factor analysis tells you that Netflix watching and late night snacking are related, does that mean one causes the other? Or is there a third underlying factor, procrastination, perhaps, influencing both? Always double-check the meaning of your factors rather than taking them at face value. Last but not least, ignoring model fit can lead to serious issues in confirmatory factor analysis, CFA. If your fit indices like RMSEA or CFI are screaming that something is wrong, don't just brush it off. Your model might not be as good as you think. Checking fit statistics is like checking reviews before booking a hotel. Ignoring them can leave you with a model that looks fancy but doesn't actually work. Factor analysis is an art as much as a science. Avoiding these common mistakes keeps your model reliable, interpretable, and genuinely useful. And once you've mastered the technical side, it's time to see how this method shines in real-world applications. Next, we'll explore how factor analysis is transforming research in psychology, sociology, and beyond. Factor analysis isn't just a fancy math trick. It's a powerhouse tool that helps us understand how people think, behave, and interact. In the social sciences, where human behavior is notoriously complex and messy, this method is like having an X-ray for psychology, sociology, and education. It reveals hidden patterns in attitudes, traits, and social trends that would otherwise be impossible to untangle. Take psychology, for example. Ever heard of the Big Five personality traits? Openness, conscientiousness, extroversion, agreeableness, and neuroticism. These didn't just appear out of thin air. Researchers ran factor analysis on thousands of personality-related questions and discovered that responses naturally grouped into these 5 underlying traits. Without factor analysis, we'd probably still be debating whether being a dog person belongs in the same category as liking adventure sports. In sociology, factor analysis is used to study social attitudes and cultural values. Governments and researchers use it to group populations based on shared perspectives, whether it's political ideologies, consumer behaviors, or social trust levels. Instead of treating every survey response as an independent opinion, factor analysis helps uncover larger societal trends. It's the reason we can talk about generational shifts, like how Gen Z and millennials have different work-life priorities compared to previous generations. Education is another area where this method shines. Schools and policymakers use factor analysis to assess student performance beyond just test scores. Instead of looking at dozens of separate skills, researchers identify core competencies like critical thinking or problem solving that influence overall academic success. This helps tailor teaching strategies to support different learning styles, making education more effective and targeted. Even in market research, which overlaps with social sciences, Factor analysis helps companies understand what really drives consumer decisions. Instead of analyzing hundreds of survey responses individually, they group customers based on shared motivations, whether it's price sensitivity, brand loyalty, or a preference for sustainability. That's how companies figure out why some people buy luxury cars while others swear by budget-friendly options. Social sciences are all about making sense of human complexity, and factor analysis is one of the best tools for the job. It lets researchers strip away the noise and uncover the core influences that shape our beliefs, behaviors, and choices. But it doesn't stop here. Next, we'll see how the same technique is revolutionizing the marketing world, helping brands understand what truly makes consumers tick. Why do some people pay extra for a brand name coffee while others go straight for the cheapest option? What makes one ad campaign resonate with customers while another completely flops? Businesses don't just guess. They use factor analysis to dig deep into consumer psychology, identifying the real motivators behind shopping behaviors and brand loyalty. One of the biggest uses of factor analysis in marketing is market segmentation, grouping consumers based on shared preferences rather than treating everyone the same. Instead of assuming that all car buyers, for example, care about fuel efficiency, factor analysis might reveal that consumers actually fall into distinct groups: tech-savvy performance seekers, budget-conscious commuters, and luxury brand enthusiasts. With this insight, car manufacturers can tailor marketing campaigns to each segment rather than sending the same generic message to everyone. Then there's product positioning, where brands figure out how consumers perceive them relative to competitors. If a company wants to launch a new smartwatch, they need to know whether people associate their brand with affordability, innovation, or status. Factor analysis helps map out consumer perceptions and identify what features actually matter to different customer groups, so brands can market themselves in a way that sticks. Advertising strategies also benefit from this technique. Ever wonder why some ads feel like they were made for you? That's because companies use factor analysis to analyze consumer attitudes and emotions. Instead of randomly testing different slogans and visuals, they identify key themes. Maybe people respond most to trust and reliability or fun and excitement, and craft messaging that hits those emotional triggers. That's how luxury brands sell status, fitness brands sell motivation, and budget brands sell value. Even pricing strategies rely on factor analysis. Some customers focus on cost savings, while others care more about quality or brand reputation. Retailers use this method to figure out who values what, allowing them to set prices and promotional discounts that attract the right buyers without leaving money on the table. At its core, marketing is about understanding people, why they buy, what they value, and how they make decisions. Factor analysis gives businesses the power to stop guessing and start making data-driven choices that actually work. But businesses aren't the only ones benefiting from this technique. Next, we'll dive into how the finance world is using factor analysis to assess risk, optimize investments, and make better financial decisions. If you've ever wondered why some investments soar while others crash, or how financial analysts seem to predict market trends, the answer isn't a crystal ball. It's data. And one of the most powerful tools in finance for making sense of all that data is factor analysis. It helps investors, analysts, and risk managers uncover the hidden forces that drive stock prices, market trends, and financial stability. One of its biggest applications is in risk management. Financial markets are filled with countless variables: interest rates, inflation, consumer confidence, and company performance, all of which interact in complex ways. Factor analysis helps identify the core drivers behind market fluctuations, allowing analysts to focus on the factors that really matter. Instead of reacting to every bit of news, investors can assess how underlying risks, like economic downturns or shifts in consumer behavior, are likely to impact portfolios. Then there's portfolio analysis, where factor analysis plays a key role in optimizing investment strategies. Not all stocks move independently. Some tend to rise and fall together due to common underlying factors like industry trends or global economic shifts. By identifying these hidden relationships, investors can diversify their portfolios more intelligently, spreading risk across different factor groups instead of unknowingly investing in assets that are secretly correlated. It's like building a balanced diet. You don't want all carbs or all protein, you need the right mix to stay healthy. Another major use is credit scoring. Banks and lenders don't just look at raw credit scores. They use factor analysis to determine which financial behaviors are the best predictors of whether someone will repay a loan. By grouping related variables like income stability, past debt history, and spending habits, lenders create more accurate risk models that ensure loans go to the right borrowers while minimizing defaults. Even macroeconomic forecasting relies on factor analysis to make sense of the overwhelming number of economic indicators. Governments and financial institutions analyze inflation rates, employment trends, and consumer spending patterns to predict economic growth or recession risks. By grouping variables into key economic factors, policymakers can make data-driven decisions instead of relying on gut feelings or incomplete data. In finance, where small miscalculations can lead to massive losses, having the ability to extract meaningful insights from complex data isn't just useful, it's essential. Factor analysis helps investors, banks, and governments make smarter, more informed decisions. And while it's transforming finance, it's not the only field benefiting from this technique. Next, we'll compare factor analysis with another popular statistical method, principal component analysis, PCA, to see how they're similar, where they differ, and when to use each one. Factor analysis and principal component analysis, PCA, are often mentioned in the same breath, and for good reason. They both simplify complex datasets by reducing the number of variables. But while they look similar, they actually serve very different purposes. Think of them like two different approaches to organizing a messy room. One is about finding hidden categories, and the other is about maximizing efficiency. Factor analysis is all about uncovering hidden causes. It assumes that the relationships between variables are driven by underlying latent factors that we can't observe directly. For example, in psychology, responses to personality questions might cluster into broader, unmeasured traits like extroversion or neuroticism. The goal of factor analysis is to find those hidden influences that explain why variables behave the way they do. PCA, on the other hand, doesn't care about hidden causes. It's purely focused on data compression. It takes all your variables and finds the most efficient way to represent them with fewer components, without worrying about whether those components have a real-world meaning. If factor analysis is about figuring out why people buy certain products, PCA is about making sure a massive customer survey can be summarized in just a few key dimensions without losing too much information. A key difference between the two is how they handle variance. PCA considers all the variance in the data, meaning it keeps both meaningful patterns and random noise. Factor analysis, however, only looks at shared variance, meaning it focuses on what variables have in common, ignoring the parts that are unique to each one. If PCA were analyzing student grades, it would compress all subject scores into a few main components, even if some students just happen to be really good at math but bad at writing. Factor analysis, on the other hand, would try to group subjects into meaningful categories like analytical skills or verbal ability, filtering out individual quirks. So when do you use each method? If your goal is dimensionality reduction, getting the most important information while preserving as much variance as possible, PCA is the better choice. But if you want to discover hidden structures in your data, revealing deeper patterns that explain why variables behave the way they do, factor analysis is the way to go. At the end of the day, neither method is better than the other. It all depends on what you're trying to accomplish. And if you want to put factor analysis into action, you'll need the right tools. Up next, we'll explore the best software options for running factor analysis, from user-friendly platforms to powerhouse statistical programs. So, you're ready to run a factor analysis, but now comes the big question. Which software should you use? Picking the right tool is like choosing a car. It depends on where you're going, how much power you need, and how comfortable you want the ride to be. Whether you're a beginner looking for something user-friendly or an expert handling massive datasets, there's a tool for you. Let's start with SPSS, the automatic transmission of statistical software. It's great for beginners because of its point-and-click interface, making it easy to run factor analysis without writing a single line of code. If you want a quick and simple solution without diving into deep customization, SPSS is a solid choice. But like an easy-to-drive car, it has some limitations. Less flexibility for advanced modeling and fewer options for tweaking parameters. For those who need more control, R is the go-to choice. Think of it as a manual transmission sports car, powerful, fast, and customizable, but with a learning curve. R is completely free and comes with multiple packages like Psych and Lavaan that let you fine-tune every aspect of factor analysis. However, it requires coding, so if the thought of typing commands instead of clicking buttons makes you nervous, it might take some getting used to. Then there's SAS, the luxury SUV of statistical software. Powerful, feature-rich, and built for handling large datasets. It's widely used in finance, healthcare, and government research where precision and scalability matter, but like a luxury SUV, it's not the cheapest option, and its learning curve can be steep. Other honorable mentions include MATLAB for advanced mathematical modeling and Stata, which is a middle ground between SPSS and R, user-friendly but with more flexibility. The best software for you depends on your needs. If you want ease of use, go with SPSS. If you need power and flexibility, R or SAS will serve you better. And if you're dealing with big data and complex models, SAS or MATLAB might be the right choice. No matter which tool you pick, the important thing is understanding the logic behind factor analysis, not just clicking buttons or running scripts. And speaking of deeper understanding, up next, we'll look at advanced topics in factor analysis, where things get really interesting. Factor analysis isn't just a one-size-fits-all technique. Once you've mastered the basics, there's a whole world of advanced methods that refine, expand, and supercharge your analysis. Think of it like learning to cook. At first, you follow recipes step by step, but as you get more experienced, you start adjusting flavors, experimenting with new techniques, and mastering the art of cooking without a guide. One of the most powerful extensions is the bifactor model, which allows for both a general factor, like intelligence in IQ tests, and multiple subfactors, like verbal and spatial reasoning. Instead of forcing variables into a single layer of grouping, bifactor models separate overarching influences from more specific ones, giving a clearer, more nuanced picture of the data. Then there's hierarchical factor analysis, which takes the idea of nested structures even further. Imagine organizing a massive music playlist, not just by genre, but also by subgenres and themes. This method lets you see how broad factors break down into more detailed ones, useful for understanding things like broad psychological traits that split into narrower personality characteristics. Another game changer is multi-group factor analysis, which lets researchers compare factor structures across different groups, like whether a personality test works the same way for teenagers and adults, or whether consumer preferences differ between countries. If your model behaves differently across groups, you might need to rethink how your factors are structured. And let's not forget machine learning integration. Traditional factor analysis relies on human decision-making for interpretation, but advanced models can incorporate machine learning techniques to improve accuracy, reduce bias, and handle enormous datasets. This is becoming increasingly important in fields like finance and healthcare, where AI-driven analytics are shaping the future. These advanced techniques allow researchers to go beyond just finding factors. They help fine-tune, compare, and extract even deeper meaning from the data. And now that we've covered the theory, it's time to see how these concepts play out in real-world scenarios. Up next, let's dive into some case studies, starting with how factor analysis is transforming psychological research. Human personality is complex. Why do some people thrive in social situations while others prefer solitude? Why do some individuals stay calm under pressure while others stress over every detail? Psychologists have long tried to make sense of human behavior, and factor analysis has been one of their most powerful tools in uncovering hidden psychological traits. One of the most famous examples of factor analysis in psychology is the Big Five personality traits model. Researchers analyzed thousands of survey responses and found that personality traits naturally clustered into five major dimensions: openness, conscientiousness, extroversion, agreeableness, and neuroticism. Without factor analysis, personality psychology might still be a chaotic mix of unstructured observations instead of a widely accepted framework. In a more recent study, psychologists used factor analysis to explore mental health and well-being. They collected survey responses measuring emotional stability, resilience, and life satisfaction, identifying three major factors influencing mental well-being: emotional stability, social support, and coping mechanisms. These findings didn't just help categorize mental health traits, they also influenced the development of better therapy techniques and intervention programs. Factor analysis has also revolutionized cognitive research, helping scientists understand how different cognitive abilities group together. Instead of treating intelligence as a single entity, researchers found that abilities like memory, reasoning, and verbal skills each contribute to overall cognitive function in distinct ways. This has shaped everything from educational testing to neurological assessments. By identifying patterns hidden in psychological data, factor analysis helps researchers move beyond guesswork, creating structured, evidence-based models that deepen our understanding of human behavior. And psychology isn't the only field benefiting from this technique. Up next, we'll see how factor analysis is helping businesses crack the code of consumer behavior in market research. Ever wonder why some brands can predict exactly what you want before you even know it? It's not mind reading, it's data science. Businesses rely on factor analysis to uncover what truly drives consumer decisions, cutting through the noise of countless survey responses and buying behaviors to identify the hidden forces shaping market trends. One major case study looked at consumer preferences in the beverage industry. Researchers collected survey data from thousands of customers, measuring factors like taste, price sensitivity, brand loyalty, and health consciousness. Instead of analyzing each factor separately, they ran a factor analysis and found that all responses clustered into five major consumer motivations: flavor enthusiasts, consumers who prioritize taste above everything else; health-conscious buyers, those who focus on ingredients, sugar content, and organic labels; brand-loyal consumers, shoppers who stick with trusted brands regardless of price; budget-driven buyers, price-sensitive customers who look for the best deals; trend followers, people influenced by social media, packaging, and new product hype. Armed with these insights, beverage companies adjusted their marketing strategies. Instead of launching one-size-fits-all campaigns, they tailored messages for each segment, highlighting natural ingredients for health-conscious buyers, emphasizing limited edition flavors for trend followers, and offering loyalty rewards for brand-loyal consumers. The result? Higher engagement, better sales, and a deeper connection with customers. Beyond beverages, factor analysis is transforming everything from retail shopping behavior to automotive purchasing trends, helping businesses fine-tune product development and advertising strategies. Instead of making assumptions about why people buy, companies now have hard data revealing exactly what matters most to their customers. And it's not just marketing. Factor analysis plays a crucial role in financial decision-making too. Next, we'll dive into how this technique is helping analysts and investors make smarter choices in the world of finance. Financial markets can be unpredictable, but they aren't entirely random. Beneath all the chaos, there are hidden factors driving stock movements, investment risks, and market trends. Factor analysis helps analysts and investors identify these underlying influences, turning overwhelming amounts of financial data into actionable insights. One major case study looked at investment risk and portfolio diversification. Analysts gathered financial data from thousands of stocks, measuring variables like earnings growth, market volatility, sector trends, and global economic indicators. Instead of treating every variable as separate, factor analysis revealed that these metrics grouped into three primary factors influencing stock performance: market sentiment, investor confidence, news coverage, and overall market momentum. Economic stability, interest rates, inflation, and global trade conditions, company fundamentals, earnings, debt levels, and industry growth potential. By recognizing these factors, fund managers were able to optimize portfolio diversification, ensuring that investments weren't overly exposed to any single risk category. Instead of just spreading money across different industries, they used factor analysis to balance portfolios based on the actual underlying risks, reducing exposure to volatile market swings. Factor analysis also plays a key role in credit risk assessment. Banks and lenders analyze borrower data, including income, debt history, spending habits, and loan repayment patterns, to identify the core risk factors that determine whether a person is likely to default. By focusing on these key factors rather than isolated data points, lenders can make more accurate credit decisions, reducing defaults while approving more responsible borrowers. Even hedge funds and algorithmic traders use factor analysis to model stock behavior and predict market shifts. Instead of reacting to every news event or short-term fluctuation, they analyze which factors are actually driving stock movements, allowing for smarter, data-driven investment strategies. The financial world is all about managing uncertainty, and factor analysis helps cut through the noise, revealing the key drivers of risk and opportunity. But there's more to a good analysis than just crunching numbers. It also has to be done ethically. Next up, we'll look at the ethical considerations of factor analysis and how researchers and businesses can use this powerful tool responsibly. Factor analysis is an incredibly powerful tool. It helps businesses understand customers, researchers uncover hidden patterns, and investors make smarter decisions. But with great power comes great responsibility. Whenever data is involved, ethical questions arise. Who collects the data? How is it used? And are we truly respecting privacy and fairness in our analysis? One of the biggest concerns is data privacy. Factor analysis often relies on large datasets filled with personal or sensitive information, whether it's consumer preferences, health records, or financial history. If this data isn't handled responsibly, it can lead to breaches, misuse, or even discrimination. Companies and researchers must ensure that data is anonymized, securely stored, and used only for its intended purpose, because no one wants their private information floating around in the wrong hands. Another key issue is bias in data and interpretation. If the data being analyzed is skewed due to unrepresentative samples or historical inequalities, factor analysis may reinforce existing biases instead of uncovering objective truths. Imagine a hiring algorithm trained on past employee data. If the dataset reflects gender or racial bias, the factors it identifies as ideal could unintentionally discriminate against certain groups. This is why it's essential to critically evaluate datasets and ensure they represent diverse perspectives. Misinterpretation of results is another ethical risk. Just because a factor analysis finds a pattern doesn't mean that pattern has real-world meaning. Correlation is not causation, and treating factor groupings as absolute truths can lead to flawed conclusions or misleading policies. If a government misinterprets economic factors, it could design ineffective or even harmful public policies. Ensuring transparency and properly explaining findings is critical to ethical factor analysis. Finally, informed consent is crucial when collecting data for factor analysis. Participants must know what their data is being used for, how it will be stored, and whether they have the right to opt out. Especially in medical or psychological research, ethical guidelines require researchers to ensure voluntary participation and clear communication about data usage. Factor analysis can do incredible good when used responsibly, but it also comes with ethical pitfalls that must be carefully navigated. Researchers, analysts, and businesses must commit to fair, unbiased, and transparent use of this tool. And speaking of the future, where is factor analysis headed next? In our final section, we'll explore how AI, big data, and new methodologies are shaping the future of this technique. Factor analysis has come a long way from its early days as a purely statistical tool. But as technology advances, so does the way we analyze data. In the coming years, we can expect factor analysis to become faster, smarter, and even more powerful, thanks to innovations in AI, big data, and real-time analytics. One of the biggest game changers is machine learning-powered factor analysis. Traditional methods require human decision-making at every step, choosing how many factors to keep, deciding on rotation methods, and interpreting results. But AI is starting to automate and optimize these processes, identifying patterns more efficiently and reducing human bias in factor selection. Imagine an AI-driven system that not only extracts factors, but also explains them in real-world terms, no more staring at numbers, trying to figure out what they mean. Then there's real-time factor analysis, which will allow businesses, governments, and researchers to analyze shifting patterns as they happen. Right now, factor analysis is mostly used on historical data, but with advances in computing power, future models could analyze trends in real time. Think stock market predictions adjusting on the fly, or consumer trends updating in live dashboards, helping businesses react instantly to changes. Another exciting trend is factor analysis for unstructured data. Traditionally, it's been used for numerical datasets like surveys and financial figures. But with new AI tools, we're seeing factor analysis being applied to text, images, and even speech data. Imagine analyzing millions of online reviews and social media posts to identify key consumer sentiment factors. No more relying solely on structured surveys. We're also seeing improvements in handling massive data sets. As data grows exponentially, old factor analysis methods struggle to keep up. New high-performance computing techniques and cloud-based analytics are making it possible to process and extract meaningful factors from big data, allowing organizations to work with datasets that were once too large to handle. And finally, expect more user-friendly tools to make factor analysis accessible to non-statisticians. Right now, it's mostly used by data scientists, but future software will make it easier for business leaders, educators, and healthcare professionals to apply it without needing a PhD in statistics. The future of factor analysis is all about speed, automation, and accessibility. As technology evolves, this method will continue to transform industries from business and finance to healthcare and AI research. But before we wrap up, let's take a moment to review what we've learned and why factor analysis remains one of the most valuable tools in modern data science. We've covered a lot, from the basics of factor analysis to advanced techniques, real-world applications, and even where the field is headed in the future. But at its core, factor analysis is all about revealing hidden structures in data, helping us make sense of complexity, and turning massive data sets into meaningful insights. We started by understanding why factor analysis matters, how it reduces dimensionality, identifies underlying factors, and improves decision-making in fields ranging from psychology to finance. We explored the step-by-step process, from data collection and extraction to rotation and interpretation, ensuring that our results are both statistically sound and practically useful. We also saw how factor analysis is transforming industries, helping businesses understand consumer behavior, guiding financial analysts in risk assessment, and even improving educational and psychological research. And let's not forget the ethical considerations, reminding us that just because we can extract factors doesn't mean we should ignore bias, privacy, or responsible data use. Looking ahead, factor analysis is evolving. AI, big data, and automation are making it faster and smarter, expanding its capabilities beyond structured datasets into text, images, and even real-time analysis. What was once a purely academic tool is now becoming an essential part of business strategy, technology, and research. So, what's next? If you're working with data, whether in research, business, or beyond, factor analysis is a skill worth mastering. It's not just about statistics, it's about understanding the patterns that drive the world around us, and with the right approach, you can uncover insights that others might miss. Thank you for coming on this journey through factor analysis. If you found this helpful, let's keep the conversation going, whether it's discussing applications, learning new techniques, or exploring how you can apply these concepts in your own work. The data is waiting. What patterns will you uncover?